Okay. Alright, you guys are all probably wondering, what the heck am I doing? Why is my hair wet? Why do I have a towel? Well, you probably have a general understanding what that means. I just got out of the shower, and you know what that means? I was in the shower, and I had a very, very great idea. And tell me if you guys can relate to this, straight up. Everybody who takes a shower, that's just where you get, this is a weird phenomenon where the shower is like where you get the best ideas you've ever had. I don't know what it's called, but it's just that true thing, like you think about every single little thing. Your mind is just so clear when you're taking a shower. I don't know the science behind it, but I just took a shower and basically I had the greatest idea ever. Yeah, but basically I had an idea that popped into my head when I was into the shower and I was, you know, shampooing my hair and everything, getting my hair all wet. The idea popped into my head and is like, yo, what if I make just a complete full guide on my trading strategy and everything I wish I knew when I first started out when it came to day trading. So literally from A to Z, basically the trading course I wish I had. So yeah, basically this is kind of a course, not really. I mean, as you can see for how long this video is, it's kind of a course, but yeah, it's just one video where I explain every single thing for you. And yeah, because I can. It's not no Instagram Reels, no TikTok short where all you brain rot people can watch. This is long form YouTube video. Yeah, so that explains why my hair is wet. But yeah, basically, welcome to the trading course I wish I had. All right, first things first though, who the heck am I? If you're watching this YouTube video, you've probably seen me on Instagram. I go by the name Tursonz. That's my social media name, but my name is Yaqub, guys. So nice to meet you guys. If you don't know me, yeah, that's my name. If you do know me, welcome back. But you probably see me from my Instagram videos. We have around 15k followers. Thank you guys so much for that once again. But yeah, basically I post lots and lots of educational content, a little bit lifestyle content, just talking to you guys all about what day trading. So yeah, but it wasn't always like this. I wasn't getting like, here, let's look at this right here, passing your funded account while hooping. I think right over here. Yeah, when what's the first thing you do when you get a payout? Honestly, guys, always pray to God. Nothing would be like nothing would be possible without God. All right, so always make sure you pray to God, whether you're Muslim, whether you're not Muslim. But yeah, this is just basically me, who I am. You probably see me on social media, but it wasn't always like this, guys. I wasn't always so. Yeah, let's get back to the very, very beginning of how I started, and let me show you guys. Maybe you guys can relate. All right, so yeah, let's hop over here. Yeah, guys, I wasn't always this guy right over here, this super professional trader, some Wall Street broker. Nah, guys, I still am not. I'm still just a guy who trades on prop firm accounts today. But yeah, basically I started where all of you guys started, right? How was I exposed to day trading? What got me interested into trading? Basically TikTok. Basically I was scrolling on TikTok. Actually, my brother was scrolling on TikTok, and he found this one guy, you know, hyping up his trading Discord server, saying that you know, we're gonna give free signal groups, you know, it was basically a Discord group where they gave out free signals and that kind of stuff. So basically I joined the Discord server, and yeah, I joined the call, and this one guy, the main guy, who at the time, his name was Roz Invests, if you guys know who he is. Maybe you do. If you guys know like Oculus and Eclipse Trades, like he's kind of like the OG. He kind of like put those guys on and made them kind of famous. I don't know, but whatever. But yeah, I joined his call, and basically he's talking about, yo, the market is about to go into a recession. The market's about to crash. So everybody buy this like index where it inverses the S&P 500. So guys, if the S&P 500 or the market goes down, this stock goes up. So basically I bought a lot of option signals into that, and what happened? Yeah, I made $4,000 on my very first trade. Yeah, basically I joined this guy's signal I was in high school, guys. And he told me to buy this stock, UVXY, that's what it was called, and I bought options on it, I bought calls on it, and I made $4,000 on this trade. And it was insane to see this money come in just in one day. And I thought to myself, like, holy, like, I'm him. I'm financially free. I made this much money, and now I could become like this guy right over here. I could travel the world, trade from my laptop, and I thought I was set for the rest of my life. Kind of, but not really. But yeah, let's go into what happened next. Yeah. Okay, so it wasn't gambling. All right, I guess kind of. Yeah, I lost all that money. Yeah, I lost all that money, and basically that $4,000 was just gone. I lost it in the next 2 days, and yeah, it was just really, really sad. I didn't know what I was doing. I had no actual strategy. I was over risking, no risk management plan, and I was just following whatever they said. I was dependent on this guy, and obviously, you know how these, you know, signal groups go. When they're winning 100%, 1,000% gainers, and then the one trade where it's a loser or it's like in like 100% drawdown, they're like inactive, MIA, they fell off the face of the earth, and then you cannot get a reach of them. You ask them, yo, are you still in the position? They don't talk to you. Then, like, say if magically recovers, then these guys are like, yo, who held that trade? Who held that trade? Bro, nobody held that trade, man. But yeah, regardless, yeah, so I lost all that money. Yeah, so I saw this, thought it was funny. Basically, yeah, my account went like this, and I lost all that money. But fast forward to today, and now I am a top step funded trader. I have 6 figures in funding. I've gotten 5 figures in prop firm payouts, top step, Apex trader funding, alpha futures now, guys. Yo, guys, if you guys want to use Apex trader funding or alpha futures, link in the description. Use my code Tursonz. We'll give you a discount on all of them. The best discounts for Apex for like 90%. Alpha futures, whatever active promotion they have, usually they have like 30% off. If you do alpha futures, make sure you DM me on Instagram that you use my code so I can enter you into a giveaway. I give out free funded accounts with this prop firm, and if you use my code, I enter you into a giveaway. So it's basically free money. If you do DM me. And then also, yeah, Top Step reached out to me right over here. I was a top 50. Oh, here, how do I zoom in? Okay, whatever. I was a top 50 funded trader amongst Top Step. They reached out to me. The Top Step, hi, my name is Tim, and I'm a member of the Top Step TV production team. I'm reaching out because whatever, blah, blah. You're currently one of our top 50 funded traders. So yeah, that's where I am today. Pretty cool to see that from being this guy over here, or this guy over here. Fake guy, fake trader who doesn't know what he's doing, made $4,000. Luckily, it was lucky. I literally followed this guy, this signal group, and yeah. But yeah, so this is where I am today, and now basically what I want. So that's enough about me. All right, now I basically want to show you guys how I got here, or how I wish I got here faster, if that makes sense. But yeah, basically this is going to be the trading course I wish I had when I first started out. So yeah, let's get into it. Okay guys, so yeah, let's get straight into this video. So basically this video is the video I wished I had watched when I first started day trading. Basically when I first started out, being a signal bot, following somebody's signals, being completely dependent on them without not even knowing what a candlestick was, and just going up and down, not even knowing what bullish trend, bearish trend was. Yeah, this is that video that I wish I had it. But yeah, before we get into it, let's just set some expectations and goals, right? These are very, very important, right? So this video is pre-recorded. Well, yeah, this is a video, right? So I want you guys to take advantage that this is a video, and you guys could literally, if you don't understand a concept, you could literally pause it, rewind, and rewatch it again until you get it, until you understand it. So if you don't understand right away, it's not like me talking to you in live time, and if you don't understand the concept and I don't go back to it. No, use this to your advantage. Pause it, rewind it, watch it as many times as possible, and basically take notes. I want you to take notes. All right, if you don't take notes throughout this video, then it's gonna show that you're not really serious. Yeah, you're really not serious when it comes to this kind of stuff. And yeah, basically I want you to take notes, and at the end of the video I'm going to tell you what I want you to do with those notes. So make sure you stay till the very end of the video, and I'm going to tell you what you do. I'm going to ask you for your notes basically, all right? And I'm going to tell you at the end of the video on how I want you to send me those notes, all right? But yeah, so expectations and goals. Why do your goals matter, right, when it comes to trading, right? Goals. Let me ask you this. Why do you want to become a successful trader? Obviously, I know you want to make this. Everybody wants to make money, right? You want to make a bunch of money, right? Everybody wants to make money, but that's with anything in life, right? You got to ask yourself, what goals do you have more specific, all right? Something that you could work towards, right? Maybe you want to help your family, retire your parents. Maybe you just want financial freedom. Maybe you just want to escape your 9-to-5. Maybe you just don't want to work that minimum wage job. Maybe you just want to make money from the comfort of your own home, you know, not commuting to work, or maybe you just want to push buttons, or yeah. Basically, I want you to set goals, right? Me personally, my goals. Let me share with you guys my goals. I personally want to have that financial freedom. I want to be able to be anywhere in the world and make money. I also want to, you know, have a nice family. I want to retire my parents. I want to just be able to travel the world. Traveling the world is a big thing too that I really wanted to do. Now, guys, I still have goals, right? Even though like I'm here, I still have goals. That doesn't just mean I get complacent. So yeah, goals. Why? Now, like, why are goals good, right? Think about it. Goals are that kind of, it kind of keeps you in check, right? They're kind of that anchor to your reality, right? Sometimes you get lost when it comes to day trading. Like, say if you start making a lot of money or you start losing a lot of money, right? You could use your goals as a target and just to keep you going, right? If you really want to accomplish something, you're going to really work towards it, right? Remember, guys, a goal, you have to have plan. You have to have a structured plan. Otherwise, it's just a dream. A goal without a plan is just a dream. So make sure you guys actually know. I want you to write down your goals right now in your notes. I want you to write down what goals do you have. All right. So yeah, basically write down your goals and ask yourself why you want to trade. Don't say I want to make money. I don't want that. I want you to write down 3 long-term goals and then 3 like short-term goals. But I don't want them to be about money. So maybe that's like being a better day trader or something like that for your short-term. But like, why do you want to day trade, right? Obviously to make money, but why do you want to make money? So I want you to go more specific with that, okay? So it could be like buy your mom a car, buy your house, or something like that. Yeah, that kind of stuff, all right? And whenever like you're having a bad day, just always go back to your goals. And one thing about goals too, guys, I want you to understand, a lot of people say they want to do this, they want to do that, but then their actions don't they don't reflect that, right? Say like, I want to become a successful trader. You already know what it takes to become a successful trader, but you're not doing the things. Like, most of you guys know exactly what you need to do, but you just don't do it, and that's really bad. So yeah, just have goals. Goals will keep you humble, they'll keep you in check, and they give you some motivation and discipline, something to work for, like work towards, right? You look forward to working towards and accomplishing that goal. All right. All right, now the next thing that I want to get into, let me put it over here. Let me copy it over. All right, some common misconceptions, and let's clear these misconceptions really quick, okay? Misconception number 1. Yeah, let me get into this. Get rich quick. These are some common misconceptions about day trading. Get rich quick. I know you guys have probably seen all these traders on social media, all these influencers flexing their cars, the lifestyle, you know, the nice cars, the nice parties, the jewelry, the watches, you know, these vacations, all this kind of stuff, guys, right? And now that stuff can happen. It is very true, but it's not the reality, right? Somebody who's flexing all these profits and everything, they're more trying to sell you the lifestyle than the actual skill of day trading. Now, like, if they're selling you something like how to live this lifestyle, or how to like take videos of this lifestyle, then yeah, obviously you can listen to them. But when it comes to actually teaching the actual skill of trading, it's not going to be rich quick, right? Me personally, guys, when I made that $4,000 and I was losing money consistently, that was 5 years ago. I was 17 at the time. Yeah, it was crazy. It was crazy times. But I'm about to be 22 now, so yeah, crazy. Yeah, so it's not get rich quick. This is gonna be long. You're not gonna binge watch some YouTube video like this video. You're not gonna watch this one video, guys, and you're not going to suddenly become profitable like right away, right? It's gonna take a couple months. You know, you're gonna want to paper trade, you're gonna want to demo trade and that kind of stuff, but it's not get rich quick. So just be in it for the long term, right? Focus on the skill of trading, not the money, all right? So it's not get rich quick. So I want you to get that out of your mind and be committed, right? It took me 2 years. Now, obviously, it's not gonna take you that long. I hope it doesn't take you that long, but yeah, find out doing good work, right? And just keeping at it. You could probably do it in like 3 to 6 months, like genuinely 3 to 6 months. All right. Yeah, let's go into misconception number 2. bam, I will win every trade, guys. Like, you probably see on social media, everybody's always winning, probably even on my social media too, guys. That's social media. It's social media. Of course I'm only going to show you wins. Of course everybody's only going to show you their wins. I actually share my losses too, guys, but most people, they never share their losses. But yeah, you're not going to win every single trade. I don't win every single trade. I don't have a 100% win rate, guys. So yeah, you guys have to understand that losses are going to happen in trading. It's kind of like a business. Treat trading like a business, right? There's business expenses when it comes to trading. You know how businesses, they have to pay employees, they have to pay for supplies, they have their own expenses, right? It's not always just profits that they're making, right? You think Apple just makes money every single time you buy an iPhone from them? No, they have their own expenses. So just kind of treat it and shift your mindset and treat the trading like a business expense, right? You're gonna lose a couple trades, but the whole point is to mitigate your losses and have more winners than losers, or have your losses small and your winning trades bigger, right? So yeah, just understand that if you lose a trade, you didn't do anything wrong. It just happens. The market, you're gonna lose. And if anybody tells you they have a 100% win rate and they never lose, run away. They're lying to you. They just want your money. All right. Yeah, they're probably not even profitable at all. But yeah. All right. Misconception number 3. And this is a big thing too. A lot. Trading is luck. Trading is luck. There's no actual skill to it. Now, to a certain extent, sometimes trades can be lucky, but if you're doing it right, the proper way, and you treat it like a business, like I said, professionally, it's not. It's when you have that structured strategy, you have that trading plan, you know exactly what you're doing. You come into the day with a structured approach, and if you see your setup, you're gonna take it. And if you don't, you're not. All right. So it's about having a clear, structured plan. You know when you're going to enter the trade, when you're going to exit, and you know you mark out your price levels and that kind of stuff, right? That it's just like, it's not like you enter into a trade and then you just pray for it to work. Please, 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 God, please let this trade hit. Let it hit my take profit. No, that's gambling, guys. And for my Muslims out there, gambling is haram. So we don't gamble out here, right? Yeah. Now let's get into misconception number 4. More trades equals more money. Guys, this is the farthest thing from the truth. All right. I see a lot of comments like this, and people, like, especially beginners, they ask this, right? Like, oh, you made $5,000 today, or you made like $10,000. Why don't you just trade more and make more money? Why don't you just keep on doing that? Guys, if that was the case, right, then people would just be trading nonstop 24 hours, right? No, guys. More trades does not equal more money. Actually, when you get more advanced, and some of you guys who are watching this, you're probably a little bit more advanced, you guys understand less is more. It's not about quantity, it's about quality trades. And sometimes a quality trade happens maybe once or twice a week, right? So imagine, like, if you're that kind of trader who takes like 10 trades in one day, how do you think people, how would you feel about taking 1 to 2 trades a week? So some days you're not even taking a trade. And that's me in the case. Like, I personally, like, if you go through my Instagrams and all of those, on the people who follow me, like, personally, like, I've had weeks, like 2 weeks where I haven't taken a single trade just because I didn't see a high quality setup. And that happens, right? I'd rather take quality setups over quantity. Yeah. So don't overtrade. We're here to take, clean setups, get our money, and just leave, right? The more trades that we take, the more opportunity we have the chance to lose. All right. So yeah. Yeah, let me think. Now, misconception number 5. Let's get into this, actually. This is a big one too. You need a lot of capital to trade. This is a big misconception, I can't lie. Now it is true to a certain extent, but because, like, think about it, somebody who has $100 compared to somebody who has $1 million, who's gonna make more money or who's gonna find more success? Obviously the guy with $1 million, because $100 means nothing to him, and $100 to somebody, you're only $100 away from zero. But the thing is, you don't need a lot of capital because there is something called prop firms. You don't those prop firms will give you funding, but we'll get more into that later into the video. Most of you guys know what prop firms are, like right here, guys. Where is it? Right over here. Like these prop firms, like right over here, like a 300k Tradeify account. You think I have $300k just lying around, guys? No, I don't. Yeah, so these prop firms will give you funding once you pass them. We'll get more into it, but for now, let's just go into like this. All right. Now, misconception number 6. Copying signals equals success. This guys, like literally copying signals equals success. What did I do, guys? Literally from the beginning of this video, what did I do? I joined this Discord signal group. It was free signal group. I copied his signals. Yeah, I made money, $4,000 on my first trade. But then what did I do after that? I copied more of his signals. I didn't know what I was doing, and I lost all that money. I lost all $4,000 of that trade. So yeah, it does not equal success, guys. Now, and even if you are finding success, right, and you're making money, so like say I made my $4,000 on this trade, right? What am I gonna do with this $4,000? What happens if that guy, this trader guy, this Discord signal group, what if they disappear? I'm completely dependent. My income is completely dependent on this guy right over here. If he disappears off the face of the earth, or something happens, or I don't know, and he just thinks, how am I gonna make money? Right? How are you gonna make money? Right? So remember, you guys are not in this to make a quick buck, get rich quick, and just leave. You're trying to do this for the long term and actually make this a successful career and actually like really learn the skill of trading. So yeah, copying signals does not equal success. So yeah, these are just some common misconceptions that I see a lot of people have. So make sure you guys include this in your notes and really understand it. So like a lot of people are going to tell you like is gambling, trading is lucky, it's gambling. No, it's not, guys. It can be, it very much can be, but if you do the correct way, how you're supposed to do it, yeah, it's a real business. But yeah, okay, so now yeah, we got this right there. So so far what we went over is clearing the misconceptions, setting expectations and goals. I want you guys to take notes and then write down your goals and everything. All right, now let's get into more the technical side, right? The tools that you need when it comes to trading. All right, so the number one tool that every single trader needs is something called TradingView. Right over here is TradingView.com. I want you guys to go on to this and let's do a quick TradingView tutorial. Honestly, you know what? Yeah, screw it. I'll make it super in depth. Now, I'm gonna go over the basics of what TradingView is. Basically, TradingView is just where you mark up all your charts. So we're actually on TradingView right now. As you guys can see, we've been doing this whole thing. Right here's the charts over here, what we trade over here. But this is basically where you do all your analysis, all your markups, all how you put in your trades. You do it through TradingView. Now, obviously, you don't really execute. You could execute on TradingView, but yeah. TradingView is the number one platform that you want to use. It's, you know, technical analysis. You mark up your trades, you analyze it, and you just mark it up. This is where you do it. So so what I want you guys to do first things first, go to TradingView.com. So here, let's open up a new tab, TradingView.com. Right there, open up TradingView.com. Then you're gonna come to the right side over here. Here you probably don't even have a watch list yet, but it's okay. You're gonna come over here. This is the main page that you go on to, TradingView.com. Right here, bang. You're gonna make an account. Now you can pay for premium. I have premium. I don't want this to show too much of my information. I don't know how much it's gonna show. Okay, whatever. And you make an account. So just make a super simple account. They have products. Their pricing and everything. Oh, TradingView over here. Their pricing. So if you go to pricing, they have premium. I have premium subscription. Honestly, guys, you should buy it. It's only $14 or actually it's $60 a month. Oh my gosh, that's actually pretty expensive. But yeah, I would suggest if you're gonna buy the annual, buy it during Black Friday or Thanksgiving time, because Black Friday, that's when I buy mine. It's like 70% off. So honestly, you could use it for free. You don't need to use it, pay for it. It is a free platform. They just have the premium stuff. But personally, if you got to be willing to invest in yourselves too, guys. Remember, you can't just be cheap. I know. I'm not gonna tell you that there's no like upfront cost when it comes to trading. It could be completely free, but you got to work a little bit harder, if that makes sense. And if you're done to work harder, that's fine. I never used to pay for it, but now I pay for it now because when I first started out, maybe that's why it took me 2 years, because I didn't pay for these things. But yeah, basically, so you're gonna make an account. So TradingView.com. Once you make your account, you're logged in. You're gonna go to products and click super charts. You're gonna click super charts, and it's gonna bring you to the charts. It's probably gonna be like Bitcoin or something, and everything like that. But yeah, and yours probably looks like a white background, a green and red candlesticks, right? Let me see if I can actually open up a incognito tab and go to TradingView.com. I bet. And then let's go to super charts. Let's see. Okay, I was right. So yeah, this is probably exactly what you're seeing on your charts right now. Yeah, this right over here. And yeah, okay. So let's walk through it. So yeah, you guys made your account and now you're on the super charts. Right here is Apple style. Right here, you could see Apple Inc. over here. Now, basically, what I want you guys to do is Apple right over here. So how do you get off of Apple? What kind of trading pair you're gonna trade? Honestly, I can't even look at these charts, this green and red, as you guys saw from my other chart colors. So let's actually change it. All right, the next thing I want you guys to go over, trading psychology, right? Your chart colors matter. Okay, I mean, they don't matter, but as a beginner trader, they do. You see it here. You see a green and red candlestick, right? These are candlesticks. You probably don't even know that yet, but green and red candlestick, you want to change these colors. So you're gonna right click and you're gonna go to settings, right? And let's change these right over here. So the body, if you guys want to go to my chart colors, it's gonna be blue over there, and then the rest is black. All these are black. But like, let's go into, okay, whatever. All right, we don't need to go too in depth into that. All right, you can change your colors, play around with it. I want you to do that. But let's actually go into playing around with TradingView a little bit and do a quick tutorial. So basically, on the left side over here is all your tools. Actually, no, let's not even go into tools yet. Let's go into this stock as a whole, right? Apple. This is the Apple stock, right? You're looking at Apple. We trade NQ, right? Which is QQQ for stocks, but it's a US index. Basically, you're gonna search up. Over here is the symbol search. So as you can see, it says Apple over here and then Apple stock over here. So if we search up NQ, that's what you guys are gonna want to search up, NQ. And now it takes us to NQ over here. Now this is the NQ chart. Let me fix this low-key because it's like canvas. I make it like this. Mine is like this light gray. And I don't like these. I don't know why it looks like this. Why does it look like that? Settings. Oh, it's because we're on bright mode. Alright. Which gray do I use? I don't even know. Okay, we'll use this gray. I don't know why it looks like that. It looks very, very weird, but whatever. Okay, so now as you can see over here, this is the NQ. This is where you're gonna search up all your pairs, right? What is a trading pair? Basically, it's all whatever you want to trade, right? For anything you want to trade, Bitcoin, BTC, USD, right there. This is the Bitcoin chart. You want to trade Microsoft, MSFT, right there. This is the Microsoft chart. You want to trade whatever, right? You get the point. Now for us it's going to be NQ, so you're going to search up NQ and you're going to use this right over here. Now you guys are going to have this delayed. If you pay for it, market open data is delayed. Learn more, and you just buy real-time data. It's like $7 a month. I have to make an account on this. Leave. But yeah, basically that's that. That's how you search it. Very, very simple. You could play around with that. All right, then let's go into the daily time frame over here. So actually the time frames itself, right? Over here, right next to the charts, is going to be the 1 day. This is basically to show the different time frames over here. So we have the 1 minute. So right now we're on the daily time frame. So now each candlestick represents 1 day. So this is today, this is yesterday, this is Tuesday. So what is the candlestick going to be? Monday, right? And then the candlestick before is going to be Friday right over there, because the market is open 5 days a week. But yeah, that's basically how it works. So now we'll get into candlesticks a little bit more, but I just want you guys to understand TradingView. Yeah, so once you do that, you play around with the time frame. So we could go to like the 15-minute time frame. Now this is, each candlestick represents 15 minutes. So this is right over here. It's what time over here? Oh, we got to go into UTC -4. Oh yeah, that's another thing too, guys. You want to change your chart to match New York time. So I'm from New York, so EST. Honestly, you should just go to UTC -4, and it should keep it to you. So like 9:30. So you should know that the market opens at 9:30. So if we go 1 minute time frame, this is the 1 minute time frame now. All the charts are open on the 1 minute time frame. All right. Now these are your tools over here to the left. So yeah, that's the time frames, how you move around a little bit. We also have indicators over here. I don't really use indicators, or I do, and I'll share that with you. Indicators, I don't like solely base my strategy off that. I do more technical and read price action and levels. That's how I trade. But indicators, it's you can use them, play around with them. I don't really recommend them for like the buy, like guys, like buy and sell signal. Like this right over here is never going to work. It's never going to work. These indicators, right? They're never going to work. But over here to the left side, the tools over here is you have your basic tools. Your long position, so when you enter into a trade, go long. So say, and then you have your short position over here, go over there, like that. Then also, if you guys want to add all these, like favorite them so they pop up. So like if you go to here, let's go back to this over here. So like I have all my favorite tools right over here favorited, and they pop up on this little mini bar. So let's do that on this over here. So like say the rectangle, right? If we do that, right, you see how it popped up over there, the arrow right over there, the line arrow, the brush, you could add that, your position size, long position, short position, you just add them, and look, they all pop up over here. And then like right here, mark out a fair value gap. You guys don't even know what a fair value gap is yet. Maybe you do. If you're a complete beginner, you probably have no idea what a fair value gap is, but it doesn't matter. All right. Yeah, so right over here is TradingView. This is your thing, your rectangle, your box, whatever you want to mark out, your levels, your zones. That's what you're gonna do over there. All right. Now adding to your watch list. So actually, okay, so let me exit out of this. So basically, yeah, this is how it's gonna look. Your charts should look kind of similar like this. Play around. Let's exit this one, and let's come back to my charts. Oh, okay, that feels so much better. Yeah, guys, basically what I want you guys to do, if you guys haven't changed your chart colors yet, make sure you do it. Here's my chart colors over here. Very basic, very basic. My canvas, this is my gray over here. Actually, this is my gray. So right there, 787B86. All right, so there's my chart colors over there. Now yeah, basically this is where you're gonna mark up all your charts. I think that's a pretty good TradingView tutorial. You want to use all your tools on the side over here, and then also your watch list. You want to add these things to your watch list. All you want to do is just add a symbol, search up what you want to add to your watch list. And yeah, guys, I trade NQ, MNQ, same thing, futures contracts. But yeah, it's basically just trading the NASDAQ US indice. Okay, so yeah, that's why. So we went over just the basics of TradingView, also why you want to change your chart colors. Because think about it, guys. Like, okay, let's actually talk about why I want you to change your chart colors. When you have your chart colors and you have them to that red and green, right, it's gonna mess with your psychology, because you're gonna start associating these colors with your emotions. And when it comes to trading, you don't want to be emotional. You want to have good psychology, a good mindset. So like every time you see like a green candle going up, you're gonna feel super happy. Green means good, right? And you're gonna feel overly happy. And then the second you see a red candle, what do you associate red with? Bad. Stop. You're doing something wrong. X. It's not correct, right? That's just how it is with like right there. Like, look, why is this X over here red? Right? It's just subconsciously red. The color red is bad. It means bad. Like, why are the evil guys always the red side, you know, and the blue guy, the good guys are always the blue side, or something like that, or green. It's just always like that. And you just don't want to associate these kind of chart colors, and it's better for your psychology. All right. So yeah, these are my favorite tools, and I recommend you guys use them. We have the brush tool, basically just drawing whatever. SMR, bank, Tursonz. Come on, go follow me on all my social media platforms, guys. I have Instagram, go follow me there, and TikTok, all that. Tursonz. Yo, honestly, I like playing, and also I feel like an artist, you could like mess with stuff too, right? Like, yo, when I was a kid, I used to like spam draw these. Do you guys know how to draw this? Oh wait, wait, what the heck? Why does it look so bad? No, I messed up. Let's. Wait, how do you draw an S? Okay, yeah, right there. And you go like that. Then you go like that. Oh, did I draw my S backwards? Sheesh. Oh snap, I did. Okay, whatever. You get the point. The Superman S, whatever. I forgot how to do it. Okay, but yeah, that's basically TradingView. Now, yeah. Okay, so yeah, I think we can go into the next steps. All right, actually no. Let's talk a little bit more about what do I want to talk about. Okay, we're already on the charts. Let's talk about candlesticks, right? So you guys are probably wondering like, what the heck is this candlestick over here? Like, what is this? I see this candlestick, and what does it mean? Basically, let's talk about how candlesticks work. Let's draw a candlestick ourselves. We'll draw a green candlestick, a bullish right there, and then a red candlestick. Don't matter about what it says, that FVG, it's okay. Right there, same with that, does not matter. So a candlestick is gonna look something like this, and then we're gonna have these wicks. Okay, so ready? This part right here, this rectangular box of the candlestick is going to be the body. This right here is called a body. Okay, that right there is called a body, and these right over here, these little lines are going to be called wicks, right? So both of these together, the body and the wick combined together equals a what? Come on, who can guess it? A candlestick. So this whole thing right over here is a candlestick. Now, so pop quiz, guys, quick pop quiz. What is this red one called? This red rectangle, what are we gonna call it? 3, 2, 1. All right, it's called the body. Now what is this called? This green line, it's not gonna be green, but you can make it green, it doesn't matter. This line, this, what is it called? The wicks, right? This is a wick, this is a wick over here. So yeah, we have our wicks. We got a wick over there, and we got a wick over here. Bang. Okay, so yeah, this is basically candlesticks. Now what does it represent? So the body, right? So if this is a green candle, right? So let's do the green candle first. So if we come to the body, right, and we see that this right here is a bullish candle. Why? Because we went up. So what are these lines represent, right? So right over here, this line, this level right over here is what we're gonna call the open. This is the open. This is when this candlestick. So now we're gonna go more into time frames. Like, remember when I was talking about the time frames, the 1 minute, the daily. So each candlestick over here represents 1 minute of time, right? 1 minute of price action, right? So we're in 1 minute. This represents everything. Same with this candlestick in the next minute, from 4:52:00 seconds to 4:52:59 seconds. That's this whole price action. Now if we do it for like 5 minutes, it's gonna get smaller, but you see, right? Now an hour, you see how they all look different, but that's just the main point of it. All right, so yeah, this is gonna be the open. All right, price open at this price level. So what is it? 20,114.5. So the open. So now so if this is a bullish candle, where did price close? Where do you think? Price closed right over here at this level, because look at the rectangle, the body, where the body stops, that's where price closed. So that is going to be labeled as our close. Right? So opened at this level, 20,114.75, and then it closed at 20,152. So that's it closed above its open, and that's why it's a green bullish candle. All right, now what do the wicks represent? It just represents the highest point of price that in this candlestick. So this is going to be the 1 minute time frame. Let's make this the 1 minute time frame. 1 minute time frame. This candlestick is 1 minute. So in this 1 minute, this was the highest that price ever went. Now, so it this during that 1 minute, it came up here and the body was looking like this, but then couldn't continue going higher, and it decided to close over here, and that's why we closed over here and we left that wick. So same thing with this. What is this bottom right here? So this is the high of the candle. This is the high of this whole candlestick. So this wick over here, we're gonna call it the high. That's the absolute high that price action went in this one candlestick. All right, and then this, what are you gonna think we're gonna call it? That's the high. What is this? Because this is a bullish candle. The low. Yep, you got it right. This is the low. This is the lowest. So this, and then it came over here. Actually, no. So we open over here. So price automatically open. So it actually looks something like this. So we came over here. Then price went up, or I don't know, whatever price did, whatever. It probably did something like that. Opened, came down a little bit, and then continue going higher. Right. So that's basically how it is. Right. So let me get rid of all that stuff. So that's the body. So yeah, this right over here. This is the high. So open, close, high, open. Right, low, close, high. All right, now let's go with the bearish example right over here. Right, so these are your wicks. Let's get rid of that. You guys know what a wick is now. You guys know what a body is. So now, since this is a bearish candle, where do you think the open is? It's going to be the opposite of what a bullish candle looks like. So right over here, this right here is our open. Oh, so this is our open. Why? How do we know this is our open? Because it's a bearish candle, which means price opened over here and closed at this level, right? Because it's bearish. How do we know it closed over here? Because it's a bearish. It's red. So now over here is actually our open. So we're gonna mark that as open. And then this over here is going to be, down here is going to be our close. And these wicks are going to be, so now this is going to be the high, same thing. High, this is going to be the low. Same concept, all right, guys? But you see the only thing that gets flipped is the open and the close, all right? And that's basically candlesticks, right? So now, as you guys could see, right, this is the 1 minute time frame. These are 1 minute time frames. So now, if I go into the 5 minutes, so like here, 458, so let's actually go into replay mode real quick. Let's go to 456, 455, right? So we have 1 minute candle. So 1, 2, 3, 4, 5. So from here to here represents one candlestick. So let's actually mark out the 5 minute candle and we'll see, right? So right here, we'll mark out this candle and you're gonna see 5 candlesticks. Or actually, right here's the high. So actually, let's go to this candlestick over here. So this is a 5 minute. Now we're on the 5 minute time frame. So let's actually mark it out, and we're gonna see. We're gonna mark out the level. So right here is the open price. This is gonna be the open price right over here because my black candles are bearish candles. So right here, this is gonna be the open. So price opened at that level right over there. Then we closed at this level over here. So close. We're gonna mark that out. Then this was the lowest that went right over here in this 5 minute time frame. In this 5 minute time frame. So from 445 to 450 in this 5 minute time frame, this is what happened, right? And then over here is our high. Let me adjust that nicely, right? So that's our high right over there, and price closed at this level, and price was the lowest this level over here. So now this is the 5 minute time frame. So now we're going to zoom into the 1 minute time frame and we're going to see how this looks. Bang, right over here. So right here at 450, you're going to see even in these candlesticks right over here. So look, price went, so 450. So don't even look at all this stuff to the left. Just look at these the next 5 candles. 1, 2, 3, 4, 5. And I don't want you to pay attention to that actually. So let's get rid of that. Right over here. So these candlesticks 1, 2, 3, 4, and 5. These are your candlesticks. And now look at this level over here. That's our open. Look, and same thing on the 1 minute time frame. Look, it opened over here. This is the open. And how do we know it's open? Because this is a bearish candle over here. This is the close for the 1 minute time frame. So you see how there's 5 1 minute candles in that 5 minute candlestick. So yeah, right. Yeah. So let's actually mark it out like how it's supposed to. So this is how it will look on the 5 minute time frame. Something like this. Right there. Actually, no, we closed over here. And then you go like this. And this is our low right there. Sheesh. Right there. All right, and look, you could see over here, price opened at this 20,163. We came up a little bit. We came up to 20,163.25. That became our candlestick high for the 5-minute. Right over here, you could see it matches that. And then whatever happened, it happened in the next minutes. In the next 5 minutes, price did whatever. And look, we came all the way down over here. So price came. So we opened over here. We came up a little bit. Then we started coming down over here. Then price decided in the last couple minutes to shoot up over here and close over here, and this created that low. As you can see, this low over here, and look, price did that, and then we closed over here. So that's exactly how you read candlestick, guys. Okay, I think that was a beautiful explanation. Okay, guys, so now that we understand the candlestick structure, now let's talk about market structure and basically the trends, and you know what a bullish versus bearish trend is. So a lot of times it's gonna go like this. So I'm gonna draw lines like this, but you'll see in a few seconds why I'm doing that. So right over here we have these lines, and then we have this line over here. So now this is price action. It could be on the 1 minute time frame, it could be on whatever time frame you want it to be on, right? So price action is coming up, coming lower, coming up higher, lower, higher, low, right? And then lower, higher, lower, higher, lower, right? So over here, this is called a higher high, higher low, higher high, higher low. Because why is this a higher high? Because it's higher than this high. And then why is this a higher low? Because it's a higher low than this low over here. Then over here is going to be a what? A lower high, lower low, lower high, lower low, lower high, lower low. Why? It's because this low, this high over here is lower than this high over here. This low is lower than this low over here, right? So now this is your bullish trend, and this over here is your bearish trend. Very simple, very simple, guys. And yeah, basically bullish trend just means price is going up, bearish trend just means price is going down, and that's very as simple as I can make it. So yeah, let's do a quick example, like from right over here, right from here to here. Let's actually mark it out. Like, let's go to the 1 hour time frame actually. So from here to here, yeah, let me go on the NQ chart so it looks cleaner. From here to here, what do you think the trend is? Let's go to the 15 minute. What do you guys think the trend is? A bullish or bearish trend? So from here to here, this is going to be a bullish trend because why? Price is going up. We have that higher high, lower higher high, higher low, higher high, even higher high, higher low, higher high, higher low, higher high, and then over there, and then the price decides to, I think, start trading down. Oh, actually not yet. So then over here, so that's your bullish trend over here. Bullish trend. All bullish trend just means price is going up. Okay. Bang, bang, bang. Bullish trend right over there. Okay. Then your bearish trend is going to be something where it's going down. So over here, price is going down over here. This is a little choppy, low key, but it's going down. That's your bearish trend. All right. Short-term bearish trend. All right. Now that we got that out of the way, let's go back to yeah, okay, so yeah, that's basically market structure. Now let's go into my actual strategy, SMR strategy. Yep. Okay, so this is the point I'm waiting for. What is my exact strategy? So yeah, my SMR strategy, each letter stands for something. That's part of my strategy. It's 3 steps: sweep of liquidity, market structure shift, and then R stands for return to FVG. Probably don't even know what a fair value gap is, but that does not matter. All right, we'll go over that really quick. So what is a sweep of liquidity? First off, what is liquidity? So yeah, basically liquidity is just basically resting money above highs and lows, right? So over here we have highs. Over here we have lows. Liquidity is just resting orders, money sitting down below. So now think about it, guys, right? How many times, if you trade like support and resistance or whatever, right? So price, you're gonna see this, right? Price respected off of this level over here 3 times. So I'm gonna buy over here when price goes like this, and right over here price goes something like this. So you enter into your position actually. So okay, we hit the zone, we respect it, whatever. So you enter into your buy position, here, put your stop loss at the low of the zone, and then price does something like this. Plays around, and then just stops you out, hits your stop loss, and then continues and goes and hits your take profit. How many times has that happened to you? This right here is what you call a sweep of liquidity. And now basically what is liquidity? Liquidity just resting money sitting above highs and lows. So right over here, is there liquidity above this point over here? Yes. So let's mark it out. Liquidity. Liquidity. What about over here? Yes. So bang. What about over here? Yes. Bang. Liquidity's over here. Liquidity's over there. Now where else is liquidity? It's above highs and lows. So we have a low over here. Bang. A low over here. Bang. Liquidity. Liquidity. Liquidity is all everywhere. Okay. And why do we trade with liquidity? Liquidity is the foundation of our strategy, right? So like look, let's look, right? Whenever we take out liquidity, a big move is always happening, right? So let me remove this, right? So we know liquidity is above highs and lows, right? So right over here, we have this high over here, or we have this high over here. So let's actually go into, let's go into like this. So we have this high over here. What do we know? What's resting above here? Liquidity. Liquidity is above this. Now let's see. Okay, so now we'll play it out. All right, this liquidity. Now what does it do? It starts dumping. It starts dumping, right? Liquidity is always initiating some type of movement. All right. So now we have now look, you could see over here we had this low over here. Price created this low. What did we do? We swept this liquidity and then started moving up. Now we have this high over here. Took out this liquidity over here. Let's see what it does after. And it started coming down just like that, right? So you guys see how like liquidity is always moving the markets. So that's just the first step. So literally the first step of my strategy is waiting for a liquidity sweep. So let's go to the 1 minute time frame. Hey, yo, where's my drawings? Okay, over here. Yeah, so sweep of liquidity, right? So price literally just swept liquidity over there. So the first step of my strategy is just watching price sweep this liquidity. Now there's some key levels of liquidity that I like price to see. I'm not going to show you guys but basically some key levels of liquidity. A lot of people ask the same question. What types of liquidity do you want to trade? What types of liquidity are you watching? What types of liquidity are you waiting to be swept out? Some key levels, and this is some sauce that nobody tells you, but I'll tell you guys for completely free. Previous day highs / lows, London lows / highs. So London highs / lows, Asia highs / lows. Okay, so yeah, these are like the main key levels of liquidity that you guys just watch out for. I'm not going to explain them. I'll probably make another video for that, but yeah, you'll understand more what this type of stuff means. But basically, let's get into it. It's just a sweep of liquidity. So liquidity was swept right over here. Now let's get into the market structure shift. Basically, all a market structure shift, actually, let's go like this. So basically, all a market structure shift is when price takes out a low, sweeps liquidity. So that's step one, complete. Now, what's the next step? So we sweep liquidity. Step one is complete. Liquidity just got swept. Now, let's go into the market structure shift. All a market structure shift is when we take out a low right over here, and then we take out a high. Just like that. Bang, bang, right there. And there's your market structure shift. Market structure shift right over there. All right, now how do we know it's a valid market structure shift? Right, you want something that's displacement on the leg that creates the market structure shift. So what is the leg that creates the market structure shift? It's this series of up candles right here. Price came up and we took out this high over here because we have a high over here, and price took it out. Basically what we want to look for, and it actually goes right directly into step 3. So basically a market structure shift is just a high, right here, a high over here. And then you want to look for something that's called a fair value gap. Now I'm going to explain to you what a fair value gap is really quickly. But, yeah, right here, return to FVG. Right here, you want this to be created over on the market structure. So let's actually go into what the heck an FVG is. So we explained what a market structure shift is. We explained what a sweep liquidity is. Now we're saying return to FVG, but you probably have no idea what an FVG is. So what are we returning to? Well, basically an FVG is going to consist of 3 candlesticks. 1, 2, and 3, right? The colors don't matter, only the middle color matters. So this is a bearish FVG over here. And then let's draw our wicks for the candlesticks. Like, guys, like, this is such a simple concept. Like, I've even taught my little brother like how to mark out an FVG. So basically you need 3 candlesticks to mark out an FVG. And basically all it is just when you have a bearish example, so the middle is bearish, it's a red candlestick, so this is going to be a bearish FVG example. Basically you're going to take your rectangle tool and you're going to mark it out from the bottom wick of the first candlestick to the top wick of the third candlestick, right there. So that's the top wick, that's the bottom wick, right there, and that's your market. This is your fair value gap, and you extend it out just like that. So now if we have a bullish example, right? So now say if this, so now we go like this. We have our red candles. Remember, the candle colors do not matter, guys. Only the middle one does. And price goes like this. And doesn't matter. Let's draw our wicks. Wick, and this is the only color that matters, so let's change that to green. So this is going to be a bullish fair value gap, and look, you see right over here these candlesticks right over here. So now for the bullish example, it's going to be the top wick of the first candlestick to the bottom wick of the third candlestick, and that's your fair value gap right there, and you just extend it out, and that's a bullish FVG. So now if it continues going up over here, playing around, and then we tap back into it, you could enter into your position like that. So that's a fair value gap, right? Fair value gaps are just imbalances in the market. You're probably gonna hear a lot of people say inefficiencies, imbalance, fair value gap. It all means the same thing. Fair value gap, right over there. And basically, now I want you to actually mark out. So now what if we did something like this? Is there a fair value gap? No, there isn't. There isn't, because there has to be a space in between these lines over here, the wicks of the first candlestick and the third candlestick. There has to be like a physical gap that you're gonna see, right? Over here, they can't overlap, basically. You see how these lines are overlapping? Now they're not. How about now? Are they overlapping? No, they're not. So there's still a fair value gap. How about now? Are they overlapping? Somebody's at my camera. I mean, at my front door, but it's okay. Right there. So that's not a fair value gap. You see how over here these are not intersecting, but now if this candlestick was like this, now are they intersecting? Yes, they are. So there is no fair value gap now. Understand? So that's basically a fair value gap. So you want to look for one of these over here on the leg that creates that market structure shift, and when price returns into it, bang, you enter into your position, and bang, right there, like that. You put your stop loss at the low, that's where you enter into the fair value gap, and then your targets take profit could be at this level of liquidity. So now let's actually go into the actual charts, the candlesticks, and let me show you a real-time example. So now let's get into an actual live example over here. So what is my strategy, guys? The SMR strategy, SMR model, right there. So the first step that we're looking for is what? A sweep of liquidity. So right here, so what are we looking for? We're looking for a sweep of liquidity, which is just a low for this example. So over here we have a low created right over here. Here is our low created, and swept it out, as you can see. So right there is our step one. And also when we created this low, we were sweeping out a key level of liquidity. I marked it out on the daily time frame right over here. This is a sweep of a previous day low. So on the daily candlesticks right here, we had this daily low over here, and swept it out, right? So we swept out that low. So let's just mark out this right over here, our sweep of liquidity, which is a key level liquidity. And now template liquidity, and right there's your sweep of liquidity. Now what are we looking for? A market structure shift. So right over here, remember when we take out a low and then we take out a high. So right here we take out this high, bang, and then with displacement. So now on the leg, remember the leg that creates that market structure shift, what do we need? We need a fair value gap, which we get right over here, guys. Look, so what is a fair value gap? 3 candlesticks, 1, 2, and 3. You see the top wick right over here, the bottom wick of this third candlestick, they don't intersect. So say if it looked like this, guys, and now Is there a fair value gap? Nope. So that means you don't enter into the trade. But we have this, and now we created this fair value gap. Price tapped back in, and then look, you could enter into your buy position like this, go like that, stop loss over there, and then you could target this other level of liquidity, and bang, just let the trade play out. So yeah, MSS, and then return to FVG. And this is exactly my trading strategy, guys. Right over here, this is my trading strategy that I use that has gotten me these results. 5-figure payouts, guys. 5-figure payouts right here from Top Step Trader. Funding 6 figures in funding with Top Step. It allowed me to become one of the top 50 traders at Top Step. See, now the thing is, right, how do I know that it doesn't just work for me? Well, here, let me go to my Dropbox. Actually, let's pull up the results. Yeah, so it doesn't just work for me, guys, right? Those were my results that you guys saw, but here's some student results. Navi right over here hit 18K across his accounts, right? Like, if we look at these pictures, $5,000 payout over here. Look at these green winning days that he's had. Let's go to the account balance over here. $16,000 in one day. Insane. Navi is actually his own man, but like, he's crazy. He's insane with it. I can't even lie. Now let's go to another student results. Like, these are just like consistent. Rami right here, for example. People passing their funded accounts. I can keep on going and going. 6,409 payout. Crazy. Passing funded accounts left and right. Yeah. Insane. And all these are just amazing results that people are having. Yeah, so those are just some of the results that some of my students are getting. And I teach all this stuff for free on my social media. But the thing is, I use other concepts as well to make this strategy better, right? I improve the strategy with other concepts that I teach all in my inner circle with my private mentorship students. Now, as you guys could see, right, it doesn't just work for me. My students have been getting insane results. But yeah, when you come to this and you see this right over here, this is just keeping it simple, guys. It's very simple, and that's exactly what you guys want to do when it comes to trading, right? All it is, SMR, sweep of liquidity, market structure shift, return to fair value gap. Now, what I want to let you guys know is that I do teach people how to do this, right? Obviously, this is just a very broad example, but you can use these concepts and you could use it and it'll help you tremendously. Yeah, so I teach more concepts, obviously, more in-depth to my private mentorship students where I live trade. We have weekly group calls. We have a community where everybody's just trying to get better, pass funded accounts, and just make money. But yeah, basically, I think that's that. If you guys have watched all these videos, I want you guys to take notes, right? If you guys don't take notes, you guys aren't gonna really show that you're committed to this. And yeah, for those of you guys who were watching from the beginning of this video, and I told you to watch to the end, I want you guys to take notes, and I hope you took notes. If you didn't, then rewatch this whole video and take notes, right? And I'm actually asking for proof. I want you to DM me on Instagram with your notes, and if you do, I have a little surprise for you. But yeah, guys, make sure you guys, this is all you really need to become successful with trading. A lot of people like to overcomplicate it. A lot of people like to oversimplify and make trading super complicated for no reason. Like, there's no reason to make anything complicated. Anything that I just showed you today, was it complicated? No. And the reason why I know it's not complicated, bro, I literally taught this strategy, or I'm in the middle of teaching this strategy to my 10-year-old little brother. If you watch my previous YouTube video, you're going to see that I'm asking him, is this a fair value gap or not? And he's able to literally tell me that yes, this is a fair value gap, and no, this isn't a fair value gap. If you guys don't believe me, watch my previous YouTube video passing the Top Step 50K challenge. You guys are gonna see. It's insane. It's insane. Alright, okay. Alright, let's stop that. Alright, congratulations. You have now completed this entire video. You have completed this entire course. Basically the trading course that I wish I had when I first started. So as you guys could see, I just held a little nice graduation ceremony. You guys are all my students. Every single one of you, whether you know it or not, that just watched this video, you guys are my student and you just graduated. You just graduated by watching this video. If you took all the notes, if you basically paid attention during the whole entire length of this video, I promise and guarantee you, you guys will get one of these. You don't need a diploma, right? Who needs a diploma? This is what you guys need. You guys need this funded certificate, guys. And once you guys can get this, you're gonna get payouts, and basically this is what you are aiming for, right? Don't go 4 years to college. Nah, guys, I'm joking. You could go to college, but yeah, right here you can get a certificate right over here. Alright, all jokes aside, guys, appreciate all you guys so much for watching. Like I said, hit the subscribe button, leave a like, subscribe, and yeah, guys, remember to message me your notes on Instagram. But yeah, guys, thank you guys so much for watching this video. I hope you guys gained some value, and if you guys are actually interested in working with me one-on-one, basically just three people, me, you, and the charts, then if you're interested in something like that, just click the first link in the description, fill out the application. If you qualify, me and my team will reach out to you. And yeah, thank you guys once again so much for watching, and hit that like button, comment down below what your goals are. Let me know what your goals are for 2025, and hit the subscribe button, and I'll see you guys in the next video. All right. Peace.